you start me when it's fine.
Start.
Okay. Good day, my viewers. Once again, I'll cut that out. Good day, my viewers. Once again, from everywhere you're watching me globally, I welcome you again to this YouTube channel, Accounts and Business Made Easy. Incidentally, because of the COVID-19 that is ravaging the world, schools and most places have been locked down. Hence, the need to come online for classes. One of the more reasons I'm having this topic today is to engage you and to connect with you. Today, I'll be talking and interacting with you, or basically teaching incomplete records. Normally, for double entry system, we have every single entry, every single transaction will have two entries to be made for it, and that means our trial balance will balance debit side to the credit side. Normally, the video on trial balance, you may watch it again to have a recap on trial balance treatment. However, when the bookkeeper or the person making the records for the business is not maybe experienced or does not know how to do it, this person may ignore certain things in the double entry system, which means the information we will have to prepare the financial statements will be incomplete. Now, normally trial balance should have debtors, expenses, assets, and drawings, creditors, capital, liabilities, income, and provisions. However, in incomplete records, it is very possible that you only have information of assets and liabilities. That means it may be very difficult to prepare the income statement to get profit. However, when that happens, that you only have information for assets and liabilities for two periods, let's say January 1, 2019 to December 31st, 2019. You have opening assets and liabilities January 1, 2019, and you have closing information for December 31st, 2019. And that information only covers assets and your liabilities. First thing to prepare is what we call opening statement of affairs and closing statement of affairs. These ones will help us to find the value of opening capital and closing capital. Let's do that. Opening statement of affairs. Closing statement of affairs. Now, opening statement of affairs, we're only going to make use of the opening information containing assets and the liabilities. Most times they will include fixtures and fittings, land and building, and other non-current assets. Then we may have items like inventory. You may have items like trade debtors. These are the assets that probably were supplied at the beginning of the period. Then our liabilities may include trade payables. Then maybe wages accrued. Now, this is liabilities, and if we remember that, as was said in the double entry system video earlier put in this channel, we may make reference to it to brush up our knowledge on it. Now, as accounting equation is assets equals to capital and liabilities. That means all the items or resources owned by a firm is equal to or is funded or financed by what the owner himself or herself brings into the firm as capital and what is obtained from third parties. That means we're going to make use of that formula to get our capital. So this is total of assets. Assuming this is $300, and let's assume the total of liabilities is $200. That means our capital, opening capital, will be difference between this value and this value. If this is assumed to be 300 and this is assumed to be 200, the difference between the two is our capital, opening capital. That is all for this opening statement of affairs, just to get the value of opening capital. We go to closing statement of affairs too. The same thing, only that the information we are using now is the closing information. If you don't forget, we used January 1, 2019 for the opening information, for the opening statement of affairs, and we're now using 31st December 2019 information for the closing statement of affairs. So we have the assets, fixtures and fittings, the closing value, land and buildings, the closing value. Then we have inventory, the closing value. Then we have trade debtors, the closing value. If there is any other item which was not available in the opening and is now available in the closing, for instance, we can have electricity prepaid that wasn't here and it may be here. We would like that it may not be a confusion. It is very possible to happen that there might not be an asset here at the beginning, but it is here at the closing, and vice versa. There might be an asset that is not here, but it was there at the beginning. It's also possible. But most times, assets that we have here are also what we have here, but different values. So we add this up, then we show the liabilities. Liabilities are trade payables here. Then wages accrued, or wages unpaid, or wages outstanding. Our accruals are the same as the outstanding or unpaid or owing at the particular point in time. So the total of assets minus the total of liabilities will give us capital. That is closing capital. Closing capital. With this, if during the year the owner of the firm took some amount of money for personal use, that is called drawings. So if during the year there is drawings of any amount, then to get the profit for the year, we are going to make use of this formula. Opening capital plus profit that we are looking for. So this is profit statement. To get that, opening capital plus profits that we're looking for minus drawings, that is this amount given. If it is not given, there's no problem. But if it is given minus drawings, will be equal to closing capital. Now we have 4 variables. 3 of the variables are known. Profit is not known. Then we'll just make use of the simple mathematical tricks. That means profit will now be equal to closing capital. Opening capital will go forward. It becomes minus opening capital. Drawings will go forward. It becomes plus drawings. Opening capital is the amount that we got here. Closing capital is the amount we got here. Drawings is given. If it's not given, then that's 0. If it is given, we make use of this formula to get profit. Only in an instance that you have assets and liability statements given only. However, if the bookkeeper or the person that prepared the accounts for the firm goes a little further to give us the cash book statement, then it is very easier now to prepare normal income statement and still know financial position. However, that is still incomplete if the cash book does not give us sales and purchases. There is no way we can prepare income statement without sales and purchases. But if the question or the situation or the examiner gives us scenario that has opening and closing assets and liabilities that were used earlier here and gives us cash book, we'll make use of the opening and closing information to prepare control accounts, debtors control account and creditors control account. We have treated this topic control accounts in one of our earlier videos. You may make reference to it to understand it better. Now, opening debtors here and closing debtors and the amount of cash collected from debtors will be used in the control account to give us the value of sales. Debtors control account. Opening debtors is balance brought forward. Closing debtors is balance carried forward. Then cash collected from credit customers, which will be shown, very likely to be shown in the cash book, will be in the credit side, cash collected. Now, the difference between this side and this side is the sales. Now, we have got the value of sales. Now, we do the same thing to get purchases by preparing creditors control account. Opening creditors is in the credit side, balance brought forward. Closing creditors is in the debit side. Cash book will very likely show the amount of cash paid to suppliers, which will be in the debit side. Cash to suppliers. The difference between this debit side and the credit side is the purchases, which is not given in the question. When you already have value of sales and purchases, then you can prepare the normal income statement to get the value of profit. Without cash book, it is difficult to get the value of profit. So the only way we can prepare income profit statement is to use this formula: closing capital minus opening capital plus drawings. Since opening capital can be obtained by preparing opening statement of affairs, and closing capital can be obtained by preparing closing statement of affairs. Drawings, if it is given, we use it, and if it is not, it is zero to get profit. However, if the question in this incomplete records gives us cash book with the opening and closing information, then we will prepare creditors and debtors control accounts to get the value of sales and value of purchases. With sales and purchases, then we can prepare normal income statement to get the value of profit. At this point, I will call the class a day. If there is any question that you have on any aspect of this topic that is not clear to you, then put it on the comment section. I will immediately respond to it by God's grace. Make sure you stay safe. Make sure you take 2 precautions. Do not stay among the crowd for now, and wash your hands regularly with liquid wash and water or with hand sanitizer. Then use face masks as much as possible. If you are going outside or if you are in the midst of people, keep distance too. And we pray that the coronavirus 19 pandemic will soon be wiped over the world will soon be wiped over the world by God's grace. Thank you very much. I hope to have you again in my next class. God bless.